Okay, good. Good morning. Actually, good morning from Sofia, and good morning to our breakfast at Ebury's. This is the first webinar we're doing this year. We started the idea about breakfast at Ebury's precisely 1 year ago, and yes, at that time it was with real coffee and real croissants. So I really hope we can soon meet again face to face. But in the meantime, let's make the best out of it. The title today is Goodbye 2020, Hello 2021. And the main focus will be on the FX market. That perspective, I would like to present you to Aline. Aline is our senior corporate dealer at Ebury. And also Joost Visser. Joost is the managing director from TRO. He will do a presentation at the end. It's really important you stay there because I think it's a wonderful tool of business networking, which is enabling. The enabler are actually the business clubs around the world, and I think you really will like it. Talking about Chamber of Commerce and Business Club, I want to welcome obviously also our ongoing supporters, the Belgian, Romanian, Moldovan and Luxembourg Chamber. I know the name is too long, so that's why I only mentioned the logo. What did we, by the way, I don't think I have presented myself. I'm Johan. I'm actually running the Eastern European countries for Ebury. And I will also do the introduction. I'm going to talk to you about perception and reality in our region. For those who know me, I have been in Romania, Eastern Europe for the last 10 years. And I have been in different boards and Steerco committees, trying at my best to sell the region, to promote the region. From 2009, when I first started in Romania as the CEO for ABN AMRO Romania, later RBS, or for running a local bank, or for starting Monaco, or for starting Ebury in the region. I think I've always been a big supporter, and I believe that also the future is actually quite bright for our region. And that's why I actually want to show you two slides, which I presented recently to the senior management in Ebury. Because you should know that for an international company like Ebury, we are in competition with other countries, with other regions, with other continents, especially now that we are part of the Santander Group. So sometimes politicians don't get that an international company, when they invest, they look at the world where they expect the best returns are. And yes, there is a certain perception about Eastern Europe, but I think there's the other part. And I want to show you a little bit what I believe is great for our region and why the next decennia will be great. I'm not sure if you know, but Eastern Europe, we have 12 unicorns. Now, unicorns are private companies valued more than $1 billion. You see some of them you recognize probably, like Skype or TransferWise, and then UPAV in Romania. UPAV itself valued more than 3 billion. 12 is quite a huge amount. As a Belgian, I know what I'm talking about. I think in Belgium, we still looking for the first unicorn. But also the startups, the future, the digital, the IT companies. I took that article, and I'm looking now in the middle of the presentation, in the Financial Times late December. And you see the market share, the growth in Central and Eastern Europe, where in 2020, we grow from about 8-9% to about, 6% to about 14%. And we're actually the only region, the only country in Europe, I'm now excluding the UK, that is actually really growing, and almost 15%. It's great, and I'm sure we'll get closer to 20% in the next 1 or 2 years. And then there's all those other great companies. Yeah, if you talk about Romania, we see the Emacs, the Bitdefenders, but also here in Sofia, Waltopia, for those that are in the like climbing business, climbing walls. I mean, they have 60% market share globally, or scale focus. And we probably ask if all those clients are already, all those companies are already clients of Ebury. Well, I can tell you some of them definitely are, and I'm sure in 2021 we'll add more to our more client list. The second slide that I showed is more related to the subject that we will onboard today, and it's about currencies. We are actually still seen as an emerging market. And therefore, if you are an investor and you invest in Romania or in Poland, you want to be sure that you're not stuck with a devaluation of 20, 30% per year. And I just showed here on the left side the devaluations versus the euro over the last year, over 2020. And you actually see that all those Eastern European countries, starting with Bulgaria, which obviously is not a surprise because the leva is what we called pegged to the euro, so linked to the euro, but also Romania less than 2%. And even the worst performers like Poland or Hungary are still way better than the Brazilian or the Turkish or the Argentina peso. So I kind of tend to say to the investors, look, this is emerging markets, yes, but it's emerging markets for beginners. And then when you look at the question, or you try to answer the question, where do you expect that the growth will come through in the next years, in the next decennia? And that's the slide on the right side. And I do recognize this as a forecast that was made end of 2019, because obviously 2020 is a very strange year. But the point I want to make is that since 2016, the region has always outperformed versus the UK or Germany or the United States, and we still believe that that will be the case. So let's be proud about the region. Let's make it a great success in the next years and in the next decennia. Yes, 2020 was what a year, very special year. But it also gives a lot of opportunities. And I think the trends that you have seen here with great companies, unicorns, startups will remain. And we will definitely be a growth region in Europe. Without further ado, I will now hand it over to our senior dealer, Aline. Up to you.
Thanks, Johan. First of all, I would like to say hello and welcome to our first webinar of the year. As Johan was saying, I'm a senior dealer for Romania and Bulgaria. And today I will be conducting a short presentation that will contain a short overview of what we overcame in 2020 and what we can expect in 2021. Now, in order to have a deep understanding of what has happened last year, we need to go back in time a little bit and go back to January 2020. 2019 was a year in which all major economies continued to steadily grow. And everybody was pretty much getting ready for the 12th consecutive year of growth after the 2008 financial crisis. The US economy was going for the longest period of time in history of continuous growth, managing to do it for more than 11 years. So 2020 was actually a year like no other before. The first 2 months of the year were actually focused on developments of the COVID-19 virus in China. And as the pandemic progressed, the virus started spreading all over the world, reaching Italy in the beginning in February 2020, and from there just spreading throughout the whole continent in Europe. In less than 2 weeks, all economies shut down, closed their borders, and we had to switch from working 100% from the office to working full-time from home. The evolution of the pandemic in the beginning was different from one continent to the other. Like initially, Europe reacted better than the US in trying to contain the pandemic. And they have taken the decision to set everybody on lockdown. And this was done as soon as cases started to go up. In the US, there was a short delay of a month, and this was mainly due to the fact that President Trump was extremely optimistic in the beginning, calming people down and telling them that, look, the virus is here, but it will shortly disappear. It will be like a miracle, and in one day it's just going to be like poof, out in the thin air. So I think this was worth mentioning because the reaction to the pandemic was also different from one economy to the other. And I would like to start with the United States, because in the United States, the economy shifted dramatically in less than 2 months. The unemployment rate moved from the lowest unemployment rate in 50 years to the highest unemployment rate in 80 years, growing from 3.5% to above 21%. And this has created a lot of panic among investors who have decided to run away from risky assets and take comfort into safe haven currencies. Now, the market reacted and euro dollar reached its lowest level in the last 3 years, breaking below 106.50 in March. The dollar gaining more than 7% against the euro in less than 2 weeks. The Japanese yen and the Swiss franc also followed the trend, and they gained more than 5% against the euro as an initial reaction to the pandemic. On the stock market side of things, the stock market started crashing as of 20th of February until the 7th of April. And it has caused a very short-lived bear market where we had daily drops of even more than 10%. And this trend changed in the beginning of April, starting with the 7th of April, as economies in Europe started to reopen and the stock market re-entered a bull market, which continues today as well. In Europe, the Europe economy did not suffer that much initially due to the support measures taken by the European governments. Now, most of the employees back in March were sent to technical unemployment in order to accommodate a swift return to normality, because everybody was thinking that it will not take more than 2-3 months. So unemployment rate shifted very, very low from 7.4% at the end of 2019 to 8.4% in the middle of 2020. And the reaction for the common currency for the euro against its G10 peers was losing ground roughly 4 to 5%. In Eastern Europe, moving to Eastern Europe and Romania, the Romanian RON stand alone. It was the champion of the region by far. While our neighbor countries suffered throughout the pandemic, Romanian RON was extremely stable, with the help of the National Bank as well, who constantly stepped into the market and kept the RON within range. Now, the 1.9% devaluation we saw in the last 12 months of the RON against euro came in the first 4 months of 2020, and it was a steady devaluation. It wasn't big shifts in the market. And this was not the case in Eastern Europe. If you look in Poland, we'll see that the Polish zloty lost 6% in the beginning of the pandemic against the euro. Czech krona in Czech Republic lost more than 12% against the euro, and the Hungarian forint lost more than 10% against the euro. So the effects in the beginning were extremely, extremely devastating for most of the economies. And in order to deal with this pandemic, central banks and reserves had to change their policies. So the first thing they did, they cut interest rates, they cut bank rates, they've cut cash flow rates, and as well as they offered unprecedented support to investors and markets. The Federal Reserves moved first, cutting rates from 2.5% to 0% back in March, having the biggest cut since the 2008 financial crisis, and launching a $700 billion massive stimulus package in order to shelter the economy from the effects of the pandemic. The Fed printed in 2020 alone $3.5 trillion. So there was a lot of stimulus coming from the Federal Reserve. In Europe, the ECB kept rates steady. They didn't touch them, but to be honest, it is extremely difficult to further cut rates when you're already at minus 0.5%. So what the ECB did in the beginning was they started with a 750 billion euros stimulus package, which has been increased throughout the year to 1.5 trillion euros in total. In Romania, the National Bank of Romania followed the same trend, and they've cut rates 4 times in the last 12 months, lowering the interest rates from 2.5% to 1.25%, with the latest cut coming on 15th of January this year. So this was pretty much the initial reaction to the pandemic. And as economies reopened in May and people starting to go back to work and industries reopened as well, the markets shift. And the markets shift a lot at the end of 2020. Now, this was mainly driven and caused by the positive news coming from the big pharma companies in regards to the COVID-19 vaccines. And at the beginning of December, AstraZeneca announced that their version of the vaccine is 90% effective in preventing the infection. Pfizer and BioNTech announced a success rate of 94%, with Moderna and Johnson & Johnson shortly following with results as good as their competitors. So most of the countries started distribution and vaccination late in December 2020, and this is continuing at the moment as we're speaking. This has actually generated a shift among investor sentiment who have continued to favor risky assets in the past weeks. Looking past the second wave, because numbers of COVID cases have increased in the last couple of weeks, but investors are not extremely concerned about this. Now, the market participants have been extremely positive in the last 3 months. First of all, because Joe Biden has managed to secure his victory in the US presidential election, as well as to the progress made towards the COVID-19 vaccines. And as vaccinations started to roll across Europe, the ECB came out and said that they're hoping to return back to an economic normality in the middle of 2021. Now, what this has caused is, this has generated a lot of optimism among currency traders who initially dumped the safe haven flows, such as US dollar, and moved again to emerging markets and riskier assets. And this has taken the parity euro dollar to levels as high as 123.50. On the RON side of things, the RON finished the year flat as a pancake, as we call it. Euro RON traded slightly below 487 in December, exactly as it did in the last 9 months of the year. So there was not that much movement on Euro RON. On the dollar side of things, dollar RON ended the year 10% lower than it started. And it has been trading in the last 12 months between 394 and 456, more than 15% volatility. This was actually driven by the USD devaluation against the euro, because euro dollar moved in 9 months from 106.50 to 123.50. And this was the main thing that moved dollar RON as well. On top of everything, on top of the pandemic, the world economies also had to go through Brexit. And this has been an extremely difficult and longevous process that started back in 2016, when the UK decided to leave the European Union after a national referendum. Now, 3 prime ministers later, and Boris Johnson managed to deliver in the end Brexit. So as of 31st of January 2021, the UK will no longer be part of the European Union, and they will start an 11-month transition period. So Boris Johnson managed in the end to salvage Brexit and to deliver it to the population after 15 months of negotiations with the European Union. And this was done actually when no one thought that a deal can be reached. And the most probable scenario in the markets were another delay. Now, although he delivered Brexit, he had big troubles in containing the pandemic. The UK has spent most of the year on lockdown. And as of September, a new mutation of the virus started spreading across the country. In December, Boris Johnson opened the economy in the beginning of December, and after only 1 week, he had to close it back with even more rigid and stricter restrictions because the number of the new virus, the number of cases of the new virus was increasing dramatically. And this has actually generated a lot of losses to their economy because the UK economy suffered in the last 12 months a lot. The UK GDP is 8.5% down year on year. The unemployment rate at the moment stands at 4.9%, growing from 3.7% in the beginning of 2020. And the forecast for 2021 is for the unemployment rate to grow to 7.5%. Now, the service that suffered the most was the service sector, which has seen a decline of over 10% last year. And companies from the financial sector, such as Ebury, who had headquarters in London, were obliged to relocate in Europe in order to continue to work with their European clients. The main destinations for the financial sector was Frankfurt and Brussels. The economic outlook of the UK has weighed on the pound a lot, and the pound ended the year with losses against euro and dollar. GBP actually moving against euro from 120 to 106, and it is currently trading at 112. So the pound, all in all, lost 14% in the last 12 months against the euro. Now, taking all of this information into consideration and the overview over 2020, we have moved into 2021 right now. So what does 2021 have prepared for us from a foreign exchange perspective? I mean, things should get better as of now. Now, the COVID-19 pandemic had a massive impact on the financial markets and on the global economy altogether. The last 12 months have been unprecedented, unpredictable, and extremely volatile. And as we entered into 2021, the recent news of the vaccination have generated rallies in safe haven currencies, have generated rallies in risk assets and sell-offs in safe havens. And we do consider this to be the trend for this year as well, as more and more people are getting vaccinated and economies should start to gradually get reopened. But one question I got at some point was, what if 2020 was actually only the teaser for what is about to happen in 2021? And I think in order for us to have the answer to these questions, we need to look ahead at the risks we have in 2021. And one of the main important questions that the FX markets is having at the moment is, what should we expect from a Joe Biden presidency? Now, at the moment, President Joe Biden took office on the 20th of January, and his first plan is to get 100 million people vaccinated in the first 100 days of office, which he is on track at the moment, with more than 20 million Americans being vaccinated in the last month. Now, Donald Trump, the ex-president, left the White House last week in a rather surprising way, being extremely quiet, because with most of social media platforms blocking his account at the beginning of the year, there was not that much coming out of the White House. A fun fact, actually, that is, I think it is important to mention, is that after Trump's accounts got blocked, the fake information regarding a fraudulent election have decreased by more than 73% in 2 weeks. So I think that answers a lot of questions regarding how fraudulent the elections were. Now, Biden's win, together with the fact that the Democrats have took control at the moment of Senate in January, have increased the chances of a larger stimulus package in the United States, and have also led to a less protectionism than the Trump era. Now, both of these things are extremely supportive for risk assets and for the risk sentiment. The current discussions that are taking place in the US at the moment are for a $1.9 trillion stimulus package, which is being stuck at the moment in Congress, but most senators have come public and said that they do expect to pass the legislation before the 9th of February. Another thing that the FX markets will follow very, very closely in 2021 will be what will be Joe Biden's approach towards China, and what will be the relationship between the US and China with Joe Biden as president. And in regards to China, Joe Biden mentioned at the end of December that he's looking for support and coalitions from other countries in order to hold China accountable for its abuses on trade, on technology, on human rights. And the negotiation that will be taking place between Biden and China, I mean, Biden will most likely try to make sure that the trade deal they agree will be supportive, and it will be protecting the American workers. And this strong stance that is coming from Biden is actually coming after the European Union has announced that they are considering a partnership with China that would provide the EU unprecedented access to technology developed by the Chinese companies in industries such as telecommunication, auto, electric cars, and finance. So most of the financial markets will follow very, very closely what will be Joe Biden's plan this year and what measures he will be taking moving forward. Now, switching to an overview of the economic development for 2020-21, the global economy is expected to grow at a record pace this year. Most financial institutions are actually seeing more than 6% growth in 2021 as a global economy. The growth will be led initially by the emerging markets, followed closely by the developed markets in the second half of the year as the economies will start to reopen. I know, even though it is extremely difficult at the moment to see the 6% growth due to the fact that COVID cases have been constantly increases in developed countries, the economy has been extremely resilient in 2020, and it is still in place for a strong rebound in 2021. And the biggest pressure that we see for 2021 for the major economies will be to get as many people as possible back on the payroll and see the unemployment rates go back actually below pre-COVID levels. So this pressure should generate an increase in salaries, which on the medium and long term should lift inflation to higher levels. The US economy for 2021 is expected to grow almost 4%. The European economy is expected to grow above 5%. And the one that stands alone on top is the Chinese economy, where financial institutions such as Morgan Stanley are seeing an economic growth of above 8%. And this is extremely important because China's economy was the only economy to beat expectations in 2020. Their growth in the fourth quarter was 6.5%, which has actually provided them the ability to be the only developed economy in the world to still see growth in 2020. The economy altogether grew 2.3% year on year, and it was also the only economy to have a V-shaped recovery. And this V-shaped recovery was mainly due to their COVID-19 exports. China managed to export in the last 12 months more than 224 billion masks all over the world. And current estimates are showing that China will become the largest economy by 2028, as opposed to 2033, which was the previous consensus. Taking all of this into consideration, it is extremely likely that the trade wars between China and the US will continue in 2021 as well. So this is more on a global, this is more of a global overview. Now, if we were to move back again to Romania, the Romanian economy shrank by more than 5.5% last year, and the unemployment rate has rose to 6.5% to 6% in 2020. Financial institutions updated their forecast for economic recovery for Romania, and at the moment, most of them are seeing 4%. The big question that was raised in regards to the Romanian economy was how long, not if it's going to be a V-shaped recovery, but how long it will take for the economy to recover to levels before that we've seen actually in 2019. And considering that the economy shrank by 5.5% in 2020 and that the economic growth for 2021 forecasted is 4%, this actually means that we will go back to pre-pandemic levels in 2022. And the growth is coming at a slower pace if we were to compare ourselves not to developed economies, but to Central and Eastern European countries. And this is mainly driven by the fact that the current account deficit at the moment stands at 5% in Romania, while the other Eastern European countries are close to 0%. And this has generated a higher risk rating for our country and more cautiousness coming from investors when they come to Romania. I think it's also worth mentioning that the long-term debt of our country has increased by 6.3 billion euros in the first 8 months of 2020. Now, central banks for 2021. This is one of the questions on what will the central banks do in the next 12 months. And the forecast is quite simple. Central banks are expected to keep interest rates low in 2021, even though the global economy is expected to accelerate the growth. Now, countries such as China, India, Mexico, these are countries where we predict that they will still cut their interest rates. And on the opposite side of things, Argentina and Nigeria are forecasted to raise rates. But in the developed economies and in the US, Chairman Jeremy Powell said that even if you can see the light at the end of the tunnel, and this is thanks to the vaccine that should be broadly available to the population by the middle of 2021, the Federal Reserve is not hasty in withdrawing their support. And at the moment, it is still expected that the Federal Reserve will keep rates close to zero until 2023. The latest inflation figures that came from the US showed that consumer price index is at 1.4% at the moment, and that the core inflation is at 1.6%. And this has actually sent a signal to the financial market that the Fed will actually increase rates earlier than 2023. Combined with the increase in US Treasury yields, this has generated a short-term appreciation of the dollar that we have seen in the first month of this year, because euro dollar opened at 123.50 and levels above 123, and has went down to levels below 121 as low to 120.50. It is still expected for this year that the G10 economies will still add close to $3 more trillion in stimulus packages. The ECB expanded their quantitative easing package by 500 billion at the latest December meeting in 2020, taking the total stimulus package for last year to 1.85 trillion euro. And they're also planning to extend their pandemic emergency purchase program until March 2022. For Romania, the National Bank of Romania cut rates 4 times in the last 12 months. We opened the pandemic with an interest rate of 2.5%, and we are standing at the moment at 1.25%. Now, if we are to take into consideration that Romania is still far away from any developed economy and that investors will most likely be extremely cautious when approaching our markets, and that the unemployment rate has grown tremendously, I think the rate cut that the National Bank, we think that the rate cut the National Bank of Romania did in January was actually needed. We are actually forecasting another cut for 2021, taking the interest rate from 1.25 to 1%, but this will be extremely dependent on the fiscal measures that the government will provide. So this sums up pretty much the economic outlook for 2021. And for the last part of this presentation, I would just like to say a couple of things of what is the market expecting for 2021 and what is the Forex market expecting for 2021. The macroeconomic and the monetary conditions will be supportive for further rallies in the risky assets. We do have an optimistic look on the global economy and on the mass rollout of vaccine throughout the world. And this should allow economies to slightly reopen. We think that most of the economies will gradually start reopening as late as end of April, when most of the population and most of the critical mass should be vaccinated by then. This should trigger an increase in economic activity in the second quarter of 2021. So the first quarter is still going to be low, but as the second quarter, we're seeing the economic growth growing at a faster pace. Now, the countries that have imposed the strictest restrictions should see their economies bounce back the fastest once the measures will be lifted. Countries such as the UK, the US, Europe, Mexico, where the measures that have been taken were actually the toughest, will have the fastest recovery. On the contrast, countries such as Australia, New Zealand, should see a low recovery as they already have opened their economies to a much greater extent than we have did. And in regards to the FX market, and in regards to the US dollar, because this will be the most traded currency by our clients as well, we're still seeing a continued sell-off for the US dollar in 2021. Our analysts are not ruling out some USD appreciation in the first quarter, in the short term, but the overall trend, we feel confident that it's going to be downwards. And the drivers behind the USD devaluation are quite obvious. We're looking at money printing, we're looking at inflation, we're looking at economic recovery, and on loose monetary policy. Our company's view is that euro dollar will be stabilizing above 125 by the end of the year, while most financial institutions are seeing the parity closing around 130. Kit Jukes, who is actually the chief economist for Societe Generale, has said that the dollar is still overvalued by 10% and that the trading range where euro dollar will be stabilizing over the next 2 to 3 years will be between 125 to 135. The most bullish financial institution in the market by far is Citi, who on the long term is seeing euro dollar breaking above 140. So this is pretty much on the euro dollar side of things. Now, on the RON side of things, we expect the parity to continue the upwards trend. And we do share the market view of all the financial institutions that the RON will continue to steadily devaluate against the euro. In the first 6 months of this year, we see euro RON breaking above 4.9, as the National Bank of Romania will slightly allow the devaluation of the RON. And in 2020, the devaluation of the RON was only 1.9%. Considering the pressure, we do think that the trend will continue at a higher level this year. So we do expect the devaluation for the RON in 2021 to be bigger than the one it was in 2020. And this pretty much sums up our overview of what should we expect in 2021. And as the last idea and as a summary of everything, I think it is worth remembering the following things. Risky assets will see growth while safe haven assets and safe haven flows will see a sell-off, we do see on the medium and long term further USD devaluation, and we do see a sharp economic recovery in 2021. Will things actually get only better? I think that is still extremely difficult to say, but we should have more clarity in 2 to 3 months after we see how many people got vaccinated worldwide. One thing that is still for sure is that uncertainty will still dominate the financial market this year. And we're still going to see a lot of unpredictability and a lot of volatility in the foreign exchange market. And with this, I finish my presentation. And thank you for the time. And I think we can open it for questions if there are any questions.
If I can propose maybe something, I think I would prefer to move on to Joost. Again, if you have questions, feel free to use the chat. And then at the end of all the presentations, we'll have a live Q&A session. So, but thank you, Lynn. And Joost, please, the floor or e-floor is yours.
Thank you, Johan. I'm gonna share my screen. You can see my screen?
Yes, we can.
Yeah, voila. So good morning, everyone. Thank you, Johan and the Ebury Eastern Europe team for inviting me to speak at this breakfast at Ebury's webinar. I am the co-founder and CEO of Ciao, the Brussels-based company behind the Connects platform. When we speak about foreign exchange, we speak about international trade. Connects is a digital platform for chambers of commerce and their members around the world. On Connects, chambers and their members can find potential new business relations and collaborate together online. Every company on the platform is either a member of a chamber of commerce or vetted by a chamber, which makes it a safe and trusted space to do business online. Chambers can connect directly with other chambers, members can connect directly with other members, and chambers can connect with members, and members can connect with chambers. So every user is linked to a chamber of commerce, which means they can ask chambers for information about the country or region in which they are based and their users. But chambers can also provide introductions and local support. Today we have over 40 chambers in 30 different countries on Connects and more than 23,000 of their members in over 80 different countries in Europe, the Americas, Asia and Africa. In Romania, we have BEROC, the Belgian, Luxembourg, Romanian, Moldovan Chamber of Commerce. And we also have AmCham Romania and BritCham Romania. And we're very proud with their partnerships. So what will 2021 bring in terms of international business development for small and medium-sized companies? Like Aline said, initially, probably a bit more of the same in terms of lockdowns at the beginning of the year, but hopefully an economic rebound when we reach the point where sufficient people will have been vaccinated so that we can move around freely again. COVID-19 has been a great accelerator in terms of digital transformation of business. More and more business is now done online, and more business relationships are entirely developed without people having to meet in person or being able to meet in person. And this means that to succeed, many companies need to adapt to a new way of doing business and become more resilient. COVID-19 has also woken up everyone to the fact that long and complex supply chains are risky and need to be made more resilient as well. And that's where Connects plays an important role. Our motto is, it takes a community to build a business. This is what Connects is all about, building lasting relationships that are mutually beneficial. No single company or organization can succeed in isolation. Every successful business needs clients, suppliers, and partners. Every chamber of commerce needs members, suppliers, speakers, knowledge partners, and service providers. We launched Connects as a matchmaking platform, but we soon realized that a match is often the outcome of a longer process. People do business with other people they know, like, and trust. And a business relationship usually develops in that order. And that's why we decided to add community management features. This enables chambers and their members to exchange information, share best practice, and collaborate in working groups, run events in the same safe and trusted space, developing lasting relationships between all participants and enable all participants to form communities in which they can help each other to be successful and become more resilient. Now, for a business community to be successful, it is important to create the right environment and have the right participants. Communities can only thrive if the environment is inclusive, accessible, and helpful. That's why chambers of commerce, such as BEROC in Romania, are ideally placed to host and facilitate business communities in a digital space. The members of communities, they need to have a common purpose, actively participate, and have goodwill. It's a question of give and take. The more active you are in a community, the more helpful you are, the more you get in return. So, like I said, it takes a community to build a business. A successful business community is a place where business, purpose, and people come together. And that is where we have positioned Connects. So I invite you all to join Connects for a free trial if you are not already a member of any of the chambers I mentioned. If you're interested in joining as a chamber or interested in creating communities yourself, please contact me or people from the participating chambers. Thank you very much.
Thank you, Joost. And yeah, I mean, it's actually a cool platform. To be honest, I first thought, well, yeah, well, what's the difference between LinkedIn and Connects? But I think here you have a more, I would say, trustful environment because it's the chambers out there, and so you have more people to support you. Yeah, so please get it as a trial. Again, if you are a member already of the chambers, that's included in your membership fee. Aline, I think we have one question, and because it's on the run, I think it's best to answer that live.
Yeah. So the question is, do we have an estimation for RON versus Euro in second half of 2021? Our forecast for the second half of 2021 is for Euro RON of 4.9. Third quarter for 2021 is for 4.92. And for the fourth quarter, sorry, it's 4.94. So
yeah, I think if I just can add on to it, I mean, I've been now in Romania for the last 10 years. If you actually would look at it from 2009 to now, you can almost put a straight line through it, and there's an average devaluation of about 1.5%. Now, last year was actually, despite everything, relatively stable, except exceptionally flat actually at the last quarter. So we foresee a little bit a more stronger devaluation than probably we had seen over the last month. So therefore our forecast.
Yeah, I think our forecasts need to be revised a little bit, but to be honest, we do believe that first half of the year is going to jump to 4.9, 492, and probably the second half of the year we're going to see a bigger drop. Probably, personally, I do see it going 496 and maybe in 2022 to test the 5 range.
I think internally we have kind of a joke that we hope that Isarescu is not going to have corona, because as long as he's there, he's going to do some intervention, so that is a kind of a gradual devaluation. But yeah, we'll see. We'll hope him all the best. Yeah,
our government, I think the best thing that our governor has done over the last couple of years is that he's controlling extremely well the RON liquidity within the market. So his interventions were very helpful in 2020. And it's also worth mentioning that in May 2020, the National Bank of Romania spent more than 1 billion euro in 1 month alone just to keep the exchange rate within range.
I don't think we have a doctor online because there's a question about the vaccine working on new mutants. And I'm probably the last one who should become a doctor. But at least what I have been reading in is that on the British and the South African variant, that the vaccines are working, even if they might be a little bit less efficient. but it seems that they're working. I mean, I think that's the good news. Now we never know, there might be a Romanian variation soon, but yeah, for the moment, I think everybody, I think the virologists are kind of still confident.
And also Moderna announced yesterday that their vaccine works for every mutation that they have seen in the world at the moment. So for the South African, for the British, for the Californian version as well, Moderna said that their vaccine is 100% working.
Good. Well, look, I think if there's no more question, I first want to really thank you for participating to our breakfast at Ebury's. Again, my hope is that we can do it in the next couple of months live with a real coffee around us. There might be a new normal, but from that perspective, I hope on the old normal. Really thank you. I mean, you have met here now Aline, Joost. Feel free to contact us for any questions you might have. And I wish you a great week, a great year, and hope we are in a position to support your business at a certain point. All the best.
Thank you all.
Thank you. Thank you. Go on, Aline.
Thank you.